Deflation by an overall value of assets, material prices, most notably from my standpoint, commodities, will resume and at the greater pace than it was before COVID. And to me, that's not profound. I think it's really unusual for people to be expecting the deflationary trends we had for the last 10 years or so to go away. I think they're accelerating, potentially in the back of normal trends, demographics, human innovation, and part of it's the dollar strength. But the key fact is we pumped U.S. money supply up the highest ever on a year-over-year basis, 26% or so. Now we're collapsing. You look at, we have a measure of global money supply, and I watch on the Bloomberg index since 2004. It is down lowest ever, -5% on a global basis. And so typically what happens in these inflation measures is they measure 12 months. Yeah, sure, inflation makes sense. It pumped up over 12 months. You look at CPI, owner's equivalent, rent, housing. U.S. money supply jumped from the end of 2019 to now or last year about 40%. The Bloomberg Commodity Index is up about 40%. Homes in Miami, property in Illinois, farmland in Illinois, all exposed to all went up about 40%. There you have it. That's going away at the most rapidly, highest velocity ever. Housing is peaked. Interest mortgages are going up. So I see what's happening is the Fed sledgehammer is pounding hard. Now they were behind on transitory. I was initially wrong on that, but now it's going back the other way and it's going to be more enduring. So let's give you an example of what I see from inflation from the world's most significant commodity as we speak right now is $88 a barrel. The first time it traded $88 a barrel was in 2007. That's 15 years ago. And what's the main reason the price is still the same from 15 years ago, despite the fact the world uses more of it? And that is the paradigm shift of the world's most significant demand pull source, importer crude oil, is now an exporter. That's the U.S. and create more of it for a lower price. Copper is almost doing the same thing. That's from commodities. It's just these inflation indices that were really on the back of the government throwing money at people, and at the same time, the Fed doing quantitative easing and just pumping tons of money in the system. It's all going away. The problem is when things drop from a higher plateau, that's deflation. So I'll give you an example of deflation, and I'll end with this. So last year, crude oil basically went from about 50 to this year's high peak of 130. So it's up over 100%. Now the average price for this year is around 100 and it's trading at 88 and it's probably going to go back to 50. Obviously, that's my view. That's deflation from a world's most significant commodity standpoint. And then everything trickles down from there. One of the most recent things that just came out was ISM manufacturing prices paid index. It's plunged below 50. That's collapsed. The price of lumber was one of the biggest biggest darlings of the commodity rally. It went up almost 300% from the end of 2019. Now it's down. Copper's down. And the key drivers of demand pull on the world basis for commodities the last 10, 20 years has been China. China, is my colleague, emerging market colleague in Bloomberg Intelligence described it, is a collapsing pyramid. Then we have strength in the dollar. Why is the dollar strong? It's tightening. So to me, these predominant deflationary forces that were distorted by the plague and by the massive pump in the system is now going away, but everything is going to drop from a lower, and inflation will be measured from a lower plateau.